Hi and welcome back to Cheeky Crypto, and today guys we are taking a cheeky look at the tax implications for digital assets from a UK perspective. This is going to go through everything we kind of know from a tax point of view for digital assets here in the UK. So if you do find this useful, informative, do go ahead and smash that like button for Chris. He really appreciates it, as do I. And if by chance you're new to the channel and not yet subscribed, do go ahead and subscribe. By subscribing, you will be kept up to date with all the videos and live streams that we do here at Cheeky Crypto. Right, Chris, shall we jump on down to the desktop and kind of just have a general kind of talk over all the various different tax things that we're aware of from a UK point of view?
Yeah, before we do though, Nick, you know, the usual jazz. We're not accountants, we're not professionals in this field. So, you know, take everything that we say with a pinch of salt, and we do recommend obviously contacting an accountant who will be able to probably verify all the stuff that we cover in this video.
Absolutely. So an accountant's absolutely the right person to be getting in touch with. Obviously, we're not accountants. We're also not financial advisors or anything like that as well. So yeah, do recommend getting in touch with an accountant. But we're going to just go through some of the things that that we're aware of. Okay, so ultimately, from a government point of view here in the UK, crypto assets, as they like to refer to them as, are newish. You know, it's quite a young industry, and obviously more and more people are, you know, starting to get into these, into these assets, and new technology has led, you know, to crypto, you know, being created in a wide range of different forms and various different uses, and each of those use cases and I guess different types of tokens have different kind of tax implications. So what we're going to go through is we're going to go through what are crypto assets from the top level view from a government standpoint. We'll also get into the different types. We'll go into which taxes potentially apply. We'll also have a look at each of the different types of tokens, right? So that could be things like exchange tokens, utility tokens, security tokens, and what tax is implicated there. Income tax in relation to these, obviously mining taxes, fees from mining, and even the airdrop fee tax implications as well. And obviously where losses potentially come in here, where capital gains come into play, and, you know, ultimately try to go through what's allowed from costing, what's pooling, and hopefully try to give a few examples as well as we go through it. And there's lots and lots to go through, Chris. So we'll timestamp this video to the best we can to help you jump to parts that you're maybe more interested in than others. So let's start with, from a government standpoint, Chris. What are crypto assets in the eyes of the government? So, you know, crypto assets or cryptocurrencies, as we know them, are cryptographically secured digital representations of value or contractual rights that can be transferred, stored, or traded electronically. And while all crypto assets or digital assets use some form of distributed ledger technology, DLT, not all applications of DLT involve crypto assets. Okay, and HMRC, which is obviously the government over here from Her Majesty's, basically HMRC does not consider crypto assets to be a currency or money. Okay, so they don't look at it like that. This basically reflects the position basically that was previously set out by the UK's Crypto Asset Task Force report, and you can find this via gov.uk website. Okay, and basically they've identified three different types of crypto assets. First of all, there's the exchange tokens. This is where things like XRP sit. Okay, there's things like utility tokens, and then obviously the one that a lot of people are probably familiar with, which are security tokens. Okay, so in the UK we have three different types, and it is also very possible that a crypto asset could be one, two, or even three of these over its lifetime, life cycle of that asset. So, you know, the tax treatment of all these types is dependent on the nature and the use of the token, and not the definition of the token, right? So it gets quite complicated. But what we're going to try to do is help clear up a lot of that the best we can. So let's take a look at exchange tokens, Chris, right? So Exchange tokens are intended to be used as a method of payment that encompasses cryptocurrencies like Bitcoin, like XRP, for example. They use, they do utilize a DLT, a distributed ledger technology, and typically there is no person, group, or asset underpinning these, right? So fully decentralized, if you will. Instead of the value exists based on its use as a means of exchange or investment, unlike utility or exchange tokens, and they do not provide any rights or access to goods or services. So you can definitely see why XRP ticks that box, right? Chris, do you want to go through what a utility token is?
Yeah, so utility tokens provide the holder with access to particular goods or services on a platform, usually using DLT. A business or group of businesses will normally issue the tokens and commit to accepting the token as a payment for the particular goods or services in question, for example, Nick.
Yeah, absolutely. And obviously security tokens, which is ones that a lot of people probably know about, specifically because of the SEC over in the US. But security tokens here in the UK are security tokens, ultimately they may provide the holder with particular interests in a business. Okay, so for example, in the nature of debt due to the business or a share of profits in the business, right? So ultimately, a security token is almost like you're invested in the actual company that issued them, almost like a share to a degree. Okay, so you have an invested interest in the particular entity. So that's why there's lots of confusion with XRP, right? Ripple's quite heavily focused on creating software that uses XRP, and the SEC and lots of random people around the world believe that XRP is a security because of Ripple, but actually they're two different entities, and owning XRP does not mean that you own or entitled to any profits from Ripple. Okay, they are two different things. So good example of what a security token is or is not. Okay, so when you start thinking about that, you obviously think, well, which taxes may apply? So in the vast majority of cases, individuals that hold crypto assets as a personal investment, usually for capital appreciation in its value or to make particular purchases, they will be liable for capital gains tax here in the UK, but only when they dispose of those crypto assets. Okay, so an individual will be liable to pay income tax and national insurance contributions on crypto assets they receive from their employer for non-cash payments. So if your employer decides to pay you via crypto assets rather than fiat cash, then you will obviously just be subject to normal income tax and national insurance here in the UK. But also income tax and national insurance is applicable to mining and transaction confirmations of airdrops. Okay, so if you had an airdrop, it's your income tax and your national insurance contributions that you have to be applied there. Likewise, if you're mining, any profits that you earn from there is basically income tax. Okay, so as set out by the UK government and HMRC, there are many cases, there may be cases where individual is running a business which is carrying on a financial trade in crypto assets, and there will be have taxable trading profits basically. And this is likely to be usable, but in such cases income tax would take priority over capital gains tax. Okay, so if you're trading regularly, you'll most likely actually be able to take advantage of an income tax perspective rather than a capital gains tax perspective. Obviously those two have different tax brackets, different allowances, and one potentially might be worse off than the other. So you really have to consider which route is best. So actually liquidating your assets and when you liquidate them could determine whether or not you're paying income tax or capital gains tax. So you do have to get in touch with an accountant to understand, or help them, or get them to help you understand what way is best to go forward. But HMRC does not consider buying and selling crypto assets to be the same as gambling. Okay, so they are taxable, whereas gambling is basically if you win something, that's tax-free. So Chris, do you want to potentially talk about the location of exchange tokens?
Individuals calculating their tax liabilities on remittance basis and for relevant inheritance tax purposes, HMRC RC, should I say, consider that throughout the time an individual is in the UK as a resident, the exchange token they hold as beneficial owner will be located in the UK. HMRC has considered their possibilities, but at this stage in the development of these tokens has found that a residence basis most accurately fits the majority of the transactions. This means a person who holds exchange tokens is liable to pay UK tax if they are a UK resident and carry out a transaction with their tokens which is subject to UK tax.
Yeah, it's quite a complicated one to understand, but also you need to be determining the location of exchange tokens as well, don't we, Chris? So when considering the location of intangible assets, the courts will generally look at the nature of the asset to find a suitable comparison. So for capital gains, and it gets quite complicated here, but you'd want to be potentially looking at sections 275 and 275A of the Taxation of Chargeable Gains Act of 1992. Get that right. But basically, there's rules here that basically are for determining whether or not a particular type of asset will be in the UK. But these are unlikely to apply to exchange tokens in most cases. It is basically HMRC's view that exchange tokens have an economic value as they can be turned to account. Okay, for example, exchanging them for goods, services, fiat currency. This is money declared by the government to be legal tender, or other particular tokens as well. So exchange tokens are a new type of intangible asset. Different to other types of intangible assets such as shares, etc. So the other identifiable party to consider is the beneficial owner of the exchange token as well. So this is why it's important to understand from a UK point of view what an exchange token is, because if we look at the I think it's like the 5th largest cryptocurrency now, XRP, which was obviously in 3rd, etc. It was up there, and it still is something that people talk a lot about. From a UK point of view, XRP is an exchange token, and because it's an exchange token, you obviously have to understand what HMRC are talking about here, with all the rules and regulations around these exchange tokens and what kind of tax you may be expected to basically have applied to those. So it's important to get in touch with an accountant because they will know this a lot better than we do. But it is it's almost actually easier, I guess, from an exchange token point of view, because an exchange token is something that will basically is utilized for purchasing goods, making payments for services, and also putting back into fiat currency, which is obviously the legal tender. So yeah, definitely worth getting in touch with an accountant, but there will be tax implications for exchange tokens. But obviously there's multiple different ways of approaching it. So income tax is definitely something that we probably need to talk about next, Chris. So in terms of financial trading in crypto assets, income tax is the thing that is most likely to get used as the taxation method. So HMRC taxes crypto assets based on what the person is holding does, right? So if the holder is conducting a trade, then income tax will be applied to the trading profits. In the exceptional circumstances, would HMRC accept individuals to buy and sell crypto assets with such frequency? So you level the organization and sophistication that the activity amounts to a financial trade in itself. If it is considered to be trading, then income tax will be the priority over capital gains tax. And obviously, you obviously take out your losses from the profit and all that kind of stuff. So yeah, it's income tax is probably the easiest way of looking at it, but obviously you have to look at the frequency of your trading to know whether or not you're going to be falling into that category. So as with any activity, the question whether a crypto asset activity amounts to trading depends on the number of factors and individual circumstances. Whether an individual is engaged in financial trade through the activity of buying and selling crypto assets will ultimately be the question of fact. It's often the case that individuals and companies entering into transactions consisting of buying and selling crypto assets will describe themselves as traders. However, the use of the term trade in the context is not sufficient to be regarded as a financial trade for tax purposes. So a trade in crypto assets would be similar to nature of trade in shares, securities, and other financial products. Therefore, the approach to be taken in determining whether a trade is being conducted or not, would be similar. The guidance can be drawn from existing case laws on trading in shares and securities. But again, always talk to an accountant before kind of making any assumptions. It is a very, very grey area at the moment within cryptocurrency trading as to whether or not you're going to fall into that category. And the other thing, Chris, we need to talk about is mining, right?
Yeah, so crypto assets can be awarded to miners, as we're all aware, right, for verifying additions to the blockchain digital ledger, for example. Mining will typically involve using a computer to solve difficult math problems in order to generate new crypto assets. Whether such activity amounts to taxable trade with the crypto asset as trade receipts depends on the range of factors such as degree of activity, organization, risk, commerciality. If the mining activity does not amount to a trade, the pound sterling value at the time of the receipt of any crypto asset awarded for successfully mining will be taxable as income. With any appropriate expenses reducing the amount chargeable as an example. So I guess that kind of brings us on to the next bit, Nick, which is like the fees from mining.
Yeah, so fees or rewards received in return for mining, right? So a good example of this might be transaction confirmations are also chargeable, via income tax. So either as trading or miscellaneous income, depending on the degree of activity, the organization, the risks associated, or again, as Chris was saying earlier, the commerciality of it. So if the individual receives crypto assets as payments for such services provided, then any increase in value from the time of acquisition will either rise to a chargeable gain or a disposable for capital gains tax purposes, or in the case of a trade, get taken into account in computing any trade profits, right? So you have to consider not only the mining elements of it, but also the fees from the mining as well. And obviously that brings us on to airdrops, because obviously we're again thinking about XRP and the recent Flare networks airdrop that everyone's kind of due to be expecting. Now, an airdrop is where someone receives an allocation of tokens or a different crypto asset. For example, the XRP that we just had here. And airdrop tokens typically have its own infrastructure. So we know that Flare Networks is going to be running on the Ethereum virtual machine, for example, which obviously will be smart contracts and all that kind of stuff, DeFi for XRP and whatnot. But basically, income tax will not apply. Will not always be applied to airdropped crypto assets received in a personal capacity. Income tax may not apply if you've received without doing anything in return. So, for example, not related to any service or conditions, not as part of a trade or a business, right? So, ultimately, income tax is not applicable here in the UK for the Flare networks, for example, and the FLR token. So once that Spark token gets dropped, there's no income tax that's associated with it, but you will obviously have to log down the value of the token when you actually get it, because if you were to sell those Flare tokens, then capital gains really kicks in. Okay. With that being said, though, airdrops that are provided in return for services, etc., they would be applicable to tax, okay, and are subject to income tax, and these could be miscellaneous income, receipt for an existing trade or whatever it may be. If you've been airdropped something for a service you've provided, for example, then you'll be paying income tax on that because it's a form of payment almost. So two different ways to look at airdrops. Ultimately, if it's an airdrop similar to what's happened with XRP and the FLR token, then no income tax will be applied. But when you sell those, capital gains tax kicks in. Okay, so you obviously have to log down the price that you acquired them at versus the price that you sell them at, and whatever profit you've made, you're paying your capital gains tax on. So anything you want to talk more about that, Chris? I think that kind of is a pretty easy one to get our heads around.
Yeah, I think it was important to bring this up, with the I guess the ongoing airdrops that we keep sort of hearing about, Flare being probably the biggest, but you've had various others as well, haven't we, Nick?
Yeah, absolutely. And I guess the other thing that we need to talk about, well, there's two things really. There's income tax losses and income gain, capital gains tax, right? Let's just look at the income tax losses first, which is where an individual who is trading may be able to reduce their income tax liability by offsetting any losses from their trades against future profits or other income. And HMRC has a self-assessment help sheet that kind of explains all of this. So if profits from activities are taxable as a miscellaneous income, then losses may also be able to be carried forward to later years. So yeah, definitely worth getting in touch with an accountant, as we've been saying throughout this video, because you can offset some of your losses against those future tax liabilities that you might have. Which brings us on to the capital gains section, Chris. So HMRC would expect that buying and selling of crypto assets by an individual will normally amount to investment activity rather than trade of dealing in crypto assets. In such a case, if an individual invests in crypto, they will typically have to pay capital gains tax on any gains they realize. Okay, so crypto assets are digital and therefore intangible, but count as a chargeable asset for capital gains if they are both capable of being owned and two, have a value that can be realized. Okay, so what constitutes a disposal? This is something, Chris, that we kind of get asked for or talk a lot about, right? Because from a UK standpoint, there's lots of things that actually constitutes a disposal of an asset. So individuals need to calculate their gains or losses when they dispose of crypto assets to find out whether they need to pay capital gains or a disposal is a broad concept. And basically, disposing of an asset includes selling crypto assets for fiat money, okay, exchanging crypto assets for a different type of crypto asset. So let's say you had XRP and you switched your XRP into Cardano. That's a taxable event, okay? So if you've made a profit on the XRP, then you're going to be paying capital gains tax on the profit that you realized in the sale of XRP before technically purchasing the ADA from Cardano. So there is that to consider. Using crypto assets to pay for goods and services. Okay, so if you were to say put £1,000 into XRP goes up to, let's say, £5,000, and then you were to go ahead and buy goods with that £5,000, that's still a taxable event because you've realized gains on the XRP. So giving away crypto assets to another person is also a taxable event because you technically, even though you didn't receive any money for it, you gave it away, so it still triggers that taxable event. So yeah, they're covering kind of four key things there. So if crypto assets are given away to another person who is not your spouse or civil partner, we must say that there, the individual must work out the pound sterling value of what has been given away. For capital gains purposes, the individual is treated as having received that amount of pounds sterling, even if they did not actually receive anything. So if income tax has been charged to the value of the tokens received, and this I think comes under section 37 of the Taxation of Capital Gains Act in 1992, then ultimately that will apply. Any consideration will be reduced to the amount already subject to income tax. But if the individual donates crypto assets to charity, they will not have to pay capital gains tax on them. This does not apply, though, if you make a tainted donation, where the individual disposes of the crypto asset to the charity for more than the acquisition cost, so that they realize a gain. So yeah, there's quite a lot in that section. So we'll say, it's important to talk to an accountant who understands digital assets and what's involved there, because even if you were to say cash out of your digital asset, Chris, into a stable coin, that's a taxable event still.
Yeah, one thing to mention is I believe that there's a capital gains tax allowance, and I think it changes yearly, but I think it's about 12,300. So anything up to that, you've got that allowance there. But yeah, definitely need to speak to an accountant and make sure that you're definitely sort of aligned to how much tax that you should or should not be paying. I guess. One other thing to mention is the exchanges are handing over information now to some of these organisations that work for the governments to obviously sort out people's tax and chase people on it. So, best to not get caught out, right?
Absolutely. And I'm just going to touch on two final points, Chris, I think are kind of worth bringing up, which is record keeping, because you obviously just quickly mentioned there that a lot of these exchanges are now talking with the authorities, right? So record keeping is a very important thing. Crypto asset exchanges may only keep records of transactions for a short period of time, so you want to make sure you download them for your own personal records. And some exchanges may no longer be in existence when an individual completes a tax return, right? So you've got to make sure that you do have your own record keeping for all of your purchases and sales, right? So therefore, it is important that an individual keeps separate records that's not on an exchange for each crypto asset transaction. And these must include the type of crypto asset, the date of the transaction, if they were bought or sold, the number of units, the value of the transaction, in the pound sterling in the case of the UK, the cumulative total of the investment, units held, bank statements and wallet addresses if they are needed for an inquiry or a review. So record keeping is a very important thing that we have to make sure happens as well, Chris. And then that kind of brings us on to the very last part of this particular video, which talks about the self-assessment tax returns, because many crypto assets, such as Bitcoin, are traded on exchanges which do not use pound sterling. So the value of any gain or loss must be converted into pound sterling on the self-assessment tax return. So if the transaction does not have a pound sterling value, for example, if Bitcoin is exchanged for XRP, an appropriate exchange rate must be established in order to convert the transaction to pound sterling. And a good example of this, I know we just said Bitcoin to XRP, but actually there are some tokens that you just simply cannot buy with fiat currency. An example of that might be 𝗕𝗘𝗪𝗔𝗥𝗘, Chris, where first of all you have to buy the Bitcoin using your fiat, and then you're trading your Bitcoin for the AGI token. So in which case you need to get the value of AGI for your tax return purposes. And the only way to do that is to first establish the number of Bitcoin that was used to buy the AGI token, and then obviously the value of the Bitcoin is ultimately the same value as what the AGI was worth. So you have to do a bit of backwards calculation to get there, but you can get there nonetheless, and it's important that you do keep those records from a tax self-assessment point of view. So reasonable care should be taken to arrive at the appropriate valuation of the transaction using a consistent methodology. So always make sure you have the same kind of calculation flowing through. We obviously have our Excel document set up, Chris. We did that as a members only video. So members of the Cheeky Crypto channel can go ahead and look at our templated file and run with that, and you'll be able to add in all the various different calculations that you need. Well, the calculations are already there, but just put your own transactions in, which will give you all of your realized values. So the amount of tax really depends on an individual's personal circumstances as well, right? And these include, lots of things such as where you live. Are you a resident in the UK? And various other different things in terms of, where you are from a tax allowance point of view as well. And everybody will have a slight difference to that. So lots of considerations for self-assessments. And again, it's best to talk to an accountant. We don't claim to be accountants. It's not what we do for a living. And yeah, this is not financial advice of any degree, but definitely from our understanding, this whole video is kind of our understanding of what happens here in the UK from a tax point of view. But again, an accountant will know it a lot better than we do. So definitely recommend you guys getting in touch with a local accountant. And before just signing up with anyone, quiz them quite heavily on crypto assets. Make sure they understand what they're talking about, because it is quite a complex and relatively new area of tax.
Yeah, for sure.
So guys, if you have found this video useful or informative, do go ahead and smash that like button for Chris. He really appreciates it. I really appreciate it. And I like to think that you all appreciate it too. And if by chance you're still here and not yet subscribed to the channel, do go ahead and subscribe. By subscribing, you will be kept up to date with all the videos and live streams that we do here at Cheeky Crypto. And with all this said, we hope you have a fantastic day, guys, and we'll catch you all in the next one.
Yeah, take care.